Good evening, everyone. This is EcoQuant coming to you with the Sunday Futures Report. Thank you all for tuning in. And today we're going to start out a little bit differently because we're looking at this four-chart layout of the S&P, the NASDAQ, the Russell, and the VIX. So this is something I normally produce on a day-by-day basis because I feel it keeps the forecast kind of in check from any day-to-day movement that may throw off the longer-term forecasts in terms of their projections. So we are still looking for more of a drop than we've seen. We've kind of moved sideways last week, but I'm still expecting some weakness over the next week and a half, 2 weeks. Everything that I'm seeing points to a low in indices on August 9. So we will be evaluating that in real time as we do. And I like to think that we provide a service that is very flexible in nature, one that is not too attached to our own ideas or predictions, but we're flexible and we can adapt. If something changes, you'll know about it as soon as I do. And I do that simply from reading the data, the trading data. So again, we're looking for this drop in the S&P. Right now I have that lowest point being at the 424 mark on QQQ. That would be at the 354 mark. IWM, the 216 mark. Very well-defined levels and timing. And that would point to VIX at 35 by August 9. So you can be clear about where my position stands. I don't have any alts. I'm just reading the data and reporting it back to you as I see it. Doesn't mean I'm not wrong sometimes, but I stick to my methods and try to make them as transparent as possible. Something I've also done recently is put alerts on this put-call ratio. I think options are playing a huge role right now in market movement. And whenever we cross this high put-call ratio, say there's more puts than calls, I expect there to be a reaction back to the mean. And to me, that means it's a sign of overly negative sentiment, and which may push the markets up. And down here, this would be a high, basically more calls than puts, and I expect the market to be pushed back to the mean again. In this case, it would be price would be bearish. So if you have any questions about my interpretation of this chart, I think that it's been pretty informative to this point in terms of when we hit those extremes in the options market, because I think there's always going to be that tendency to bring things back to kind of that neutral framework where the market makers are essentially making, their money. I think that's really what drives a lot of markets in this day and age. Looking at our first futures chart, so I have to see how the S&P chart opens. This is ES. But again, I'm looking for that drop into testing this 429 level again. So we've had test 1, test 2, test 3. And I think when we get into this August 9, August 10 time frame, we're going to bounce. The maximum level I see for that bounce is 449, and I expect us to follow a channel all the way up to 4556, as I've stated before, into October. We can look at VIX, which is going to be inversely correlated to our S&P chart. And again, I'm seeing this spike up into the 28 range. And if we look at that date, it lines up similarly with the others we've looked at, which is August 10. So a retreat in VIX into September, and an even further retreat into November. So again, I'm assuming that we have bullish action going into that time. Looking at the NASDAQ, I think it's going to slide sideways for a bit here. We may have one little drop into August and some sideways motion, and then a drop into this early August time frame. So if we say August 9, that's going to put us right here. So